Hi guys, welcome to this Money Control live stream. It's a Monday morning, a brand new week, a truncated one at that, and you're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, where the markets are headed after hitting a fresh high in Friday's session, and of course, lots of stocks in focus, Vedanta, Tata Steel, and a lot more. We'll be talking about that, and of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed, and we will take them up. But before we do all that, let's take a look at the top headlines at this hour. The S&P 500 and the Nasdaq closed lower, in fact, for the second straight week on uncertainty over the Fed's rate hike trajectory. Asian markets opened lower, Japanese markets remain shut today. Meanwhile, GIFT Nifty is implying a flattish start for the Indian market. Oil prices hold at a 10-month high. Brent stays above $94 a barrel due to extended supply cuts along with optimism over Chinese demand. Government raises windfall gains tax on crude oil from 6,700 rupees to 10,000 rupees a ton amid a surge in international crude prices. Duty on aviation fuel is cut from 4 rupees to a litre to 3.5 rupees, while that on diesel is also cut from 6 rupees a litre to 5.5 rupees. And among stocks in focus today, watch out for Tata Steel as UK government agrees to invest £500 million to decarbonise the steelmaker's Port Talbot plant. Also in focus will be L&T as 10,000 crore rupee buyback kicks off today. And we have a new listing, Jupiter Life, making its stock market debut today. Experts believe that it could open with a 30% premium to its issue price. Up to 8 bills are listed for consideration on and passage during a special 5-day session of the Parliament beginning today. The session will see a discussion on Parliament's 75-year-old journey and House proceedings moving to the new building as well. There's also speculation of the government having a surprise item up its sleeve. Well, let's then bring up our first guest on the show, Deven Choksey, DRChoksey FinServ, joining in this morning. Good morning, Deven. Great to have you on the show. As we can see, markets have been hitting a fresh high almost every other day, despite the fact that, FII inflows have cooled off a bit this month. Do you expect, the markets to continue on the upward trajectory because of, resilience in DII flows going forward? Or do you think we are in for consolidation or some bit of correction kicking in this week?
So, good morning, Nandita, and thanks for having me on the show. Well, I think the important point is that in past few months, the traders have earned significantly high amount of return on their investments. And this is one of the reasons for which they are continuously shuffling their portfolio from one end to another end, one sector to another, one stock to another. And that's where probably I think you're seeing a continuous actions in the market. So the other fundamentals remain same, other macro concerns remain same. The local concerns remain same. I think the larger part of the activity in the market today is largely due to the funds chasing stocks at this point of time, and that is where probably I think you are seeing one after another sector taking part or participating into this particular rally. Up till now, the large cap stocks, which are index heavyweight stocks, they haven't been performing because I think the focus was largely on the mid and small cap stocks. But the mid and small cap stocks today, I think, are valued beach, and as a result of which, I think smart investors or traders are taking money out of mid and small cap and now putting back into the large cap. So this shift is right now happening, is being experienced currently. And that's the reason for which we saw the rally in some of the heavyweights, large caps in banking space, some of the heavyweights in IT space. I think that rally probably will continue in my viewpoint. And even if there are small corrections in between, which they must bring, my reading says that I think the market would eventually, I think, start giving preference to the valuations. And particularly the bigger companies would get relatively higher preference at this point of time due to the liquidity. At the same time, I think the larger ability to make profits. So we remain fundamentally convinced. Maybe I think one will have to buy into every dip and every correction.
All right, buying on dips is the strategy then. But let me ask you about the metal space, Deven. Given the fact that Tata Steel has inked a JV with the UK government to decarbonize the Port Talbot plant, do you think that removes a major overhang from the stock, given the fact that now they won't have to divert cash from the India ops and, pump it in the UK operations? Do you think the earnings visibility improves for the European operations for Tata Steel? And on the other hand, you have Vedanta, which has been been warned by S&P of a downgrade given its debt obligations. If you look at both the stocks, they have done extremely opposite to each other when it comes to the stock price movement. What are your thoughts on these two stocks going forward?
So on one side, the metal as a commodity is likely to find significantly high amount of traction, largely because of the fact that global money is being spent on infrastructure in building the renewables, and as a result of it, I think higher demand for metal will continue. In respective space, be it hydrogen, be it in the area of solar, or be it in the area of wind. Wherever you look at it, I think the entire ecosystem getting developed will consume higher amount of metal across the globe. So that is a good sign. On the other side, the macro factor pertaining to the higher crude oil prices suggests that metal commodity prices on a beta basis, I think, also starts probably going up. And that is a good sign for some of the companies who are holding the stock in their books at this point of time, because I think they would get at least 3 months of good advantage of higher profits coming in. As far as Tata Steel in particular is concerned, yes, I think this development is definitely sounding well. Though I do believe that I think the cost saving that they have talked about is going to eventually play out and not going to happen on a day one. But the fact remains that I think the overhang goes away, so that should result into re-rating of the stock, even the stock macro fundamental support that they are getting, or the tailwind support that they are getting. Vedanta on the other side, I think definitely looks interesting from a perspective of investing. Largely corrected on the valuation and the price, and I think the stock could possibly see participation from traders, investors at current levels, because downside risk is definitely reduced and significantly reduced at current levels.
All right, that's the view on the metals basket. Then let's talk about the resurgence in crude prices as well, and the fact that government has hiked the windfall tax to 10,000 rupees a ton. Remember, back in May, the tax was nil, right? And now it has risen to 10,000 rupees per ton, given the fact that we have seen a resurgence in crude prices and they are heading towards $100 a barrel. In light of this, what is the outlook on some of these oil refineries and upstream companies like ONGC, RIL going forward, Deven?
So those into the exports, I think this particular windfall tax possibly excludes the export business, and exports, I think, of refining product is highest in case of RIL. So to a greater extent, I think the impact remains minimal as far as RIL concerned, because I think largely this windfall tax gets applied onto the domestic sales of the refining products. So that is a positive as far as I think RIL is concerned. It can't be clubbed and mixed along with the other PSU oil refining companies. The PSU oil refining companies certainly would not get the advantage of what otherwise they would have got it, because of the higher prices and resultant higher sale prices. In any case, I think we are heading into state elections next month and thereafter. So from that perspective, I believe that I think the overhang will continue as far as I think these PSU oil companies are concerned. And that's where I am not very fond of, I think, bringing this particular companies into the portfolio, largely because I think they are driven largely by the government decision from time to time, which keeps on changing. So would probably, I think, stay away from it. But RIL will remain positive given the reasons.
All right, positive on RIL, but stay away from some of these PSU names. But lastly, I want to ask you, Deven, what is it that you're liking at the current juncture? Any contrarian bet from your end when it comes to sectoral plays? We've seen defense, rail, kind of surging ahead and how, but some bit of correction came in the defense names last week. Do you think that's an opportunity to buy?
Auto and auto ancillary and bank and NBFCs, particularly the NBFCs which are into the retail space, they are looking reasonably good from the current point of view. And at the same time, auto ancillary remains absolutely convincing from the investment.
All right, Deven, with that, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. With that, let me also bring on board our technical expert for today. Joining me is Rajesh Palvi of Axis Securities. Good morning, Rajesh. We are breaking new highs almost every other day. It's a festive week. Do you expect levels of 20,500 this week itself, or do you think we'll have to wait for a couple of more weeks to that level?
Good morning, Nandita. Yeah, so market is also enjoying this festive season, and we are seeing that Nifty is making new high on a daily basis. So looking at the momentum at broader market, sectorial rotation is happening in the market. That clearly indicates that this rally can extend further. and we are projecting target for Nifty towards 20,500 in the continuation of this uptrend. So view is bullish. Buy on dips is the strategy. If you get any chance to buy Nifty in any decline towards 20,000 is good level to again re-enter in the Nifty. And we will keep our stop loss at around 19,900 till these levels are not taken out by the market. The trend is likely to remain on the bullish side. 20,500 where we are projecting the immediate target for the Nifty in the coming trading sessions. For Bank Nifty also, Bank Nifty is also now trading above 46,000 level. We have seen both the indices have witnessed the long built-up setup in the previous session also. And most of the large cap stocks which were in consolidation now started participating in this rally. So it's, across the board, large cap, mid cap, small cap, everywhere we are seeing, buying traction. As the overall sentiment is on the bullish side, so one should remain on the long side of trade. For Bank Nifty, one should now trail their stop loss on higher level towards 45,700. Till these levels are intact, we are projecting our targets for Bank Nifty also towards 46,600 to 46,800. So both indices are looking promising, and we are keeping our buying position on the open at this moment.
All right, setup is positive when it comes to both Nifty and Nifty Bank. But I want to get your thoughts on the auto pack, especially the two-wheeler space, given the fact that, Bajaj Auto was all fired up, hit 52-week highs on Friday. 5,150 nearly is where it's at the current juncture. And we have a query coming in on Hero MotoCorp as well from Karthik Reddy. He wants to know your thoughts on this stock. But now, given the kind of run-up that we've seen in Bajaj Auto, would you advise investors to, look at that over Hero Moto? Or do you think both the stocks are looking attractive on the charts now?
So, Nandita, Nifty Auto Index is clearly showing that, uptrend, and we have seen a mild profit taking in recent past. But again, especially in last two trading session, most of the losses have been recovered in the Nifty Auto Index, and now almost it's trading near to all-time high trajectory. Looking at the overall Nifty Auto setup, we believe that, whole automobile space is likely to behave on the bullish side, and we are holding our bullish view for most of the auto stocks. As we discussed for this Bajaj Auto, yes, there is a breakout on the weekly chart. Stock is now looking bullish. Stock managed to view breakout of its multiple supply zone. So now if it continues to hold above 5,050 level, then next target for Bajaj Auto is towards 5250, 5300 in the continuation of this uptrend. Even on the two-wheeler space, we believe that, Hero Motor is also looking promising. Very narrow price consolidation has taken place in last couple of weeks. In the near-term chart, yes, there is a breakout on the daily chart. So looking at the near-term setup, yes, if stocks holds above 2990 level, then this stock can also show further more bullishness, and we can see a target of 3150, 3200 for Hero Motor also. So both two-wheeler stocks, Bajaj Auto, Hero Motor, even though TVS Motor is also looking attractive. So we are holding our bullish view for most of the auto stocks at this current juncture.
All right, that's the view on auto stocks, Hero Moto, TVS and Bajaj Auto. Hope that answers your query. But let's talk about Larsen and Toubro. Rajesh, buyback opens today. In fact, the company had hiked its buyback price to 3,200 rupees per share. It is open till about 25th of the month. On the charts, I think L&T has fizzled out a bit over the last 5 days. It has not really done much. Has been a little volatile, but given negative returns, what should the strategy be now that the buyback is kicking off today?
So buyback is there, so stock prices is now consolidating. But overall, if we analyze the setup, it's in bullish trajectory only. Some consolidation is taking place on the near-term chart, but we believe that if stocks holds about 2,800 level, then there is no as such worry for this mild profit taking or for this consolidation. Once again, stock crosses about 3,050 level, then this rally can extend further also towards 3,200 level, 3,200 plus level also. So overall structure is bullish. Those who are holding the position, they can hold their position with stop loss of 2,800.
All right, that's the view on L&T. Keep holding on to it in case you already have position in the stock. But let's talk about a Dabur now, Rajesh. FMCG stocks have been under a spot of bother. In fact, El Nino conditions building up, so that doesn't really bode well for rural recovery, and which is why FMCG stocks have been under pressure of late. There's a brokerage report that has come out on Dabur. Morgan Stanley has an overweight rating, target price at 600 rupees a share. In fact, even CLSA has an outperformed rating, the target price of 620 or thereabouts. If you look at the stock, over the last 1 month, it is just has been really, pretty much flat with positive returns, but mild one at that. How soon can we expect 600 on the charts? Do you think there could be consolidation before we see levels of 600?
So most of the FMCG stocks are in a sideways consolidation. There is no participation as such from the FMCG pack in this rally. Most of the stocks are consolidating. If you talk about Dabur, stock is in downsloping channel on the weekly chart since last couple of weeks. Looking at the near-term, short-term setup, stock is now trading near to its important support area of 550, which is very important support area on the downside, as these levels are coincide with 100 as well as 200-day moving average. So 550 is the important level on the downside. On the higher side, the major hurdle for the stock is at around 578, 580 zone. Until these levels not taken out, we may see further more consolidation in the Dabur for some more couple of trading session or couple of weeks. So 550 should be your stop loss. On the breakout of 580. Yes, we can expect a target of 600 also on the higher side.
All right, that's the view on Dabur then. But let's take up a few viewer queries that are trickling in this morning. K. Naga wants to know your thoughts on granules. He's bought shares at the rate of 337 rupees a share, and he wants to know whether he should be holding on to it or looking at exiting. Now he's making mild losses. The stock is somewhere around 331 or thereabouts, but over the last 5 days it has done fairly okayish. 5% gains or thereabouts. 1 month returns 14.5% or thereabouts. Should he hold on to make some more money before getting out, or what would you advise him to do?
I think he should hold, as we are seeing that since last 4-5 week, stock is making higher high low formation. That is clearly indicating that sustained buying is taking place. Most of the pharma stocks have done well in last couple of weeks. Looking at the breakout on the weekly chart, we expect that now if stocks holds above 325 level, then possibly this stock can extend its gain towards 345 to 350 also in the near term basis. So I think one should hold the position with stop loss of 320, for immediate target 350, and then if it's crosses those levels, then 380 would be the next target. So whole pharma pack is looking promising at this current juncture. So we advise to hold their position with stop loss of 320.
All right, hold on to granules with the stop loss that Rajesh mentioned. Hope that answers your query. Let me take up a query on Andhra paper next. Hemant wants to know your thoughts on that, Rajesh. After the kind of run that it has seen over the last 6 months, investors really want to know if it's a good time to book profits in Andhra paper. Would you advise them to take some profits off the table, or would you say that exit and book profits at the juncture?
I think whole paper paper stocks are showing good buying interest since last couple of weeks. And looking at the breakout on Andhra paper, yes, we do expect these breakout may sustain. And now looking at the breakout and the volume action, we expect that these really can extend towards 640, 650 also. So he should hold the position with stop loss of 580. And we believe that, furthermore traction on the buying side would be there for most of the paper stocks. So Andhra paper is buy at the current level.
All right, that's the view on Andhra paper. Hold on to it. In fact, you can even look at buying into it. That's the view then. But let me also take up a query on Interglobe Aviation. This one is coming in from Nisha. Wants to know your thoughts on this stock. Crude resurgence and low yields. These two have been issues that have come to the fore, and they are weighing in on the aviation stocks as well. Looking at Indigo particularly, would you advise investors to utilize this dip to buy, given the fact that air prices are soaring and they will remain elevated for some time, right? So do you think it's a good time to buy into aviation stocks?
I think there will be some more pressure we can see as the crude is still moving up. So a direct effect will come to the Indigo also at this moment. So I think looking at the near-term chart, there is a weakness, and we expect that furthermore pressure in the near-term basis towards 2320, 2300, where one can can add their position on the long side. 2300 is the important support area. So if you get any chance around 3-4% down from the current level, then one can look at to buy this stock. As overall structure for Indigo is on the bullish side, so buy on dips should be the strategy. But wait for some corrective move, then to add this stock on the decline.
All right, wait for more correction before buying into an interglobe. Hope that answers your query. Let me also take up a query on, state-owned mining stocks. Then Alex wants to know your thoughts on NMDC and Coal India with a long-term perspective. Now, both these stocks have been doing fairly well. In fact, Coal India, I think, hit a fresh 52-week high as well last week itself. So, how should one approach this for the long term? Do you think, again, buying on dips is a strategy one should look at?
Yeah, stock managed to give breakout on the monthly chart also, and looking at the overall structure, we believe that yes, this stock can continue furthermore upside. Buy and dip should be the strategy. 270 is the immediate near-term support area for the stock. So if it's hold those level, then next target for Coal India towards 300, 310 also we can see. For NMDC again, yes, view is on the bullish side. Stock is making high top, higher bottom formation on the daily as well as on the weekly chart. The kind of breakout which we are witnessing on the weekly chart, it clearly indicates that this stock can also show good traction on the higher side. So one can hold this stock for positional basis towards 170, 180. We can see a target in the coming week. So NMDC is also looking promising. Keep your stop loss at around 135.
All right, that's the view. Hope that answers your query. But I have, just a couple more queries coming your way, Rajesh. One query is coming in on NBCC India from Pon Rajesh, and the other one is on Engineers India. This one is coming in from Mahendra Sharma. On the charts, how are these two looking, and how should one approach these two stocks now?
So after a long consolidation, now NBCC is approaching to its multiple supply zone, which is at around 62 level. So if a stock manages to cross 62, then there would be a breakout on the monthly as well as on the weekly chart. Then possibly stock can show furthermore traction towards 75 to 80 zone also on the positional basis. So after a long consolidation, now stock is approaching to the breakout. So I think one should hold this position as overall market structure is on the bullish side. And this stock is also looking promising on the near term as well as on the short term chart. So your stop loss at this juncture should be around 56 to hold long position. Above 62, we expect this target we can see a target of 75 to 80 also. Engineers India is also showing good buying interest since last couple of months. Stock is consolidating. But looking at the overall structure, we expect that if stocks hold above 140 zone, then this stock may also show some buying interest, and possibly once stock crosses above 165, then the next target for the stock on the higher side towards 185 to 200 also.
All right, that's the view on NBCC India and Engineers India. Hope that answers your queries. But with that, we've run out of time on this query segment. But before I let you go, Rajesh, what are you recommending for our viewers this morning?
So we think Bharti Airtel can exhibit furthermore bullishness, very strong buying action. Stock almost trading near to all-time high trajectory. Looking at the buying interest in the last week, we expect that Bharti Airtel can show upside momentum towards 965, 980 zone. So buy Bharti Airtel with stop loss of 915. Another stock is from pharma space, that is Dr. Reddy. Looking at the breakout on the daily chart, we expect that Dr. Reddy can continue furthermore upside towards 59 50 59 80 zone. So Dr. Reddy is buy with stop loss of 57 65. The third stock that we like is from automobile space, that is we have already discussed that TVS Motor is looking very promising. Stock has witnessed a strong buying action in the last week, and this is the third consecutive week where we are seeing sustained buying action is happening. So TVS Motor one can look at to buy for upside target of 1560 to 1580. Keep your stop loss at around 1465.
All right, these are some of the recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for taking out time as usual and joining in this morning and sharing your thoughts with us. Wish you a very happy Ganesh Chaturthi.
Same to you. Happy Ganesh Chaturthi.
Thank you. Well, with that, we have come to the end of this, edition of Morning Trade. But before I go, let me remind our viewers that we have a new listing today, Jupiter Life. It is expected to list with a 30% premium over its issue price of 735 rupees per share. In fact, the IPO was subscribed over 67 times, aided by a strong demand from the QIB segment. So watch out for that listing at 10 a.m. With that, it's a wrap on this edition of Morning Trade. Thanks a lot for tuning in. And of course, stay tuned because coming up next is Opening Bell.